Active trend traders. Today your midday market update is coming to you via a recording rather than a written email. And I just want to quickly highlight what's going on in the market right now, especially after yesterday with the Fed coming down and saying that basically flashing the big sign that says the U.S. market is the only game in town. So that's a little bit what we're seeing today with people flooding into the market, probably from some of the foreign countries. I want to remind everybody that everything we present on active trend trading is for trading purposes only, and traders should always paper trade any new method prior to risking their own personal capital. So let's take a real quick look at the stock charts to see what is in fact going on today. First, a quick look at the S&P. Very interesting. Yesterday was the Fed day. The market came off of a inverted hammer, which had come to rest, well, guess where? Right in the middle, up the upper range of the magic fib box. Magic fib box is defined as the retracement levels between 38.2 down to about 63%. These, we get that reversal yesterday, and the Fed day is always a challenge to trade because basically, you never know you never know what the market's going to do about it. So I kind of stand back away from the market on Fed day and let it settle out. And as we can see, in the market liked what the Fed had to say, and it bounded up on the S&P. And today we get a nice gap up above this resistance level at the 220 level. What does this look like on an intraday chart? I've got three charts across your intraday: 1 hour chart, daily chart, and a weekly chart. So what are we looking at? Basically, we gapped up this morning and immediately start running into this resistance about the 250 level, and that's where it is kind of stalling out right now. Well, what does that level relate to? It is the 20-day moving average. It hits the 20-day moving average first thing this morning and stops dead in its tracks, can't go any further. And whether or not we get a potential sell-off, we don't know, or a pullback. But since we do have a bullish breakout here, at least above the 50, and also on the intraday charts, we get the 820 period moving average bullish crossover. The yellow line here is the 60 period moving average, which equates approximately to the 8-day. So what I would be waiting for on, like an ETF type trade or something like that, we get this breakout, and this has worked very well in the past. Get this breakout, wait for price action to either pull back to, get my pen, pull back to wherever the moving averages are as we continue to press higher. Notice the other thing that said this is not the time to go long, as the stochastics seem to work very well with the intraday charts, highlighting where the lows are and where to bounce. And when the stochastics are up in the upper level, if it is a uptrend, it's a good time not to go long. Let me move this back a little bit in time, and you can see what I'm talking about. It would be nice if all those drawings would just stay where they were. Let's go back to the early part of when we're getting that big run. This is right here. We're starting about October 23rd after we had gotten the breakout. This time we've got the stack of the moving averages in a positive direction, even though they are just an hourly chart. And every time it pulls back to the 20 period, the stochastics go into the oversold condition, which tell us, hey, get ready, something's going to happen. We're still in a bullish move. Same thing here, same thing a little bit here, but then it started to roll over. And if we roll that back even to where we actually bottomed, you can see that utilizing those stochastics would have done very well on timing the entries. So I just want to throw that as kind of an extra, because you know how I like to keep teaching. So let's roll on, because I'm going to try to get this done quickly. NDX. The Nasdaq is showing similar characteristics to what the S&P is showing. We do get a nice gap up this morning, as you can see here, above the 8-day moving average. Now, normally that could be an entry point when you get a break and a close above the 8. The challenge, of course, on this particular chart right now is it gapped right into and up to, through this price action day, right into a level of resistance. If it breaks above the 20, then that changes the story, and that may be an area where we'd want to look to get long in the Nasdaq, or again, looking over here on the intraday chart, if we get some kind of a pullback down to around the 60 period moving average, or if the 8 period gets on up here, and we get a little bit of a nice pullback, stochastics, TSI, oversold, it may be worth waiting a couple of days for us to get a little bit of an oversold condition, especially if we get that pullback to those intraday moving averages. Russell was basically the big surpriser yesterday. The small caps really liked that the Fed basically said we're going to be easy on interest rates going forward for a long time, or at least potentially through 2015. The smaller caps stocks, some of the oil companies and those kind of things who are, small oil companies that have a lot of junk bonds, as long as the interest rates stay low, that is good for them. But look where the Russell winds up today. What does it do? It gaps up right back up into old resistance. Depending on how today finishes, this could be a hanging man type candle, which might say, hey, we will get a potential pullback and before we move higher. If we break above, where's it potentially going? Back up to the other old highs, which is up at the 1208 area. So I hope that, so what are we anticipating? One, we need to get some pullback before we can get into the ETFs. And it was really a excellent move on the Russell, most powerful move of any of the indexes yesterday, and the Russell has been the laggard most of the year. Quickly, a couple of stocks we're watching. That's what I will be doing in these video updates, is taking a look at a couple of stocks. BDSI, getting a nice little volume profile. TSI has crossed up. We have a flag going here. If we break through this flag and through the 20-day moving average, we could anticipate that we go back up to the previous highs. Or if we get some retesting or some consolidation in this area, watch for a breakout above that. So that's a BDSI. And then one that is typically almost on everybody's watch list is Alibaba. So Alibaba yesterday gets a really nice breakout above the 8-day moving average. It looks as if the 8-day is now primed to start moving up and potentially provide us a bullish crossover, the 8 and the 20. However, today's action, Alibaba gets right back up to a level of, even though it's maybe a minor level of resistance, and it is selling off a bit. But it could be just basically going back to retest this breakout of this trend line. And so I'm liking Alibaba if it can either get a bounce here or break out above this, because we get a breakout above the, what level is this? Oh, above the 111-ish level. You got clear sailing up to 115, break to 115, up to about 119.50, 120 looks good. So that basically covers what we wanted to cover today on the market update. I want to remind everybody that, one, we have 2 weeks left of our end-of-year membership special, and what are those specials is basically for the premium active trend trading membership. We're giving a 40% discount, $29.99. And also you can go to the website and check out what is included in that. And then a new service that we have just launched is the early warning alert system. This is focused primarily on only trading the indexed ETFs, both the leveraged and the non-leveraged amount. Regular, this is a yearly subscription for $8.99. Introductory membership, $349. That's for the complete year. So go to activetrendtrading.com monthly subscriptions for further detail and gives you a whole list of everything that's included. Or you can go to the my YouTube channel, and it's in the banner. You can click there, and that will take you to the same place. So until tomorrow, folks, have a great day. And remember, trade wisely and trade profitably. This is Dennis signing off.